Alright, welcome back everyone. So in this video, I want to break down the two trades that I took today in the AM session on Nasdaq. And I believe there is value in sharing these breakdowns after the fact because you can still learn how I think, what I look for, right? And I shared basically that I had my initial first loss today here. And then almost immediately right after, I went back in and recovered the loss and more. So I took two trades in the AM session on Nasdaq and wanted to talk about what was my idea for these trades and what went wrong with the first trade. So let's get into that, okay? So let's mark these highs. We had two news today. Medium impact news, high impact news in the AM session, 8:30 AM, right? Durable goods, and then 10 AM, CB consumer confidence. So if we go to the 1-minute chart, so this is Nasdaq, this is S&P. You can see that where was this? The 8:30 news right here didn't really do anything much. Right, there was not much reaction really. However, there was a nice scalp here after this candle broke this swing high, came back inside the imbalance, filled it. You could have been a buyer above this relative equal highs, right? I missed this setup here. Anyway, so I figured, okay, I looked at the price action on the 15-minute chart and I watched how price kind of slowly came up, came back down, came up, came back down a little bit. I was looking at the previous day high and I wanted price to trade above the high, and then I would consider start looking for shorts. So my idea was to buy before going short, right? I was anticipating that, okay, we still have the 10 AM news and the market is opening at 9:30. I wanted to capitalize on that, on the false move up before potentially looking for shorts. And actually, I didn't sell today afterwards. I was content with the my first loss and then making it back 3 times. So that was good for me. I might look for something in the PM session, but the idea with this was my first trade. Again, I was looking at, you have to understand that, again, I'm a scalper, right? So I don't really need, and many times in my videos I mentioned that I only need a few hours of data to work with. I can work within the current price fractal and find trades just on the 1-minute chart. Again, same thing, just buying in a discount, offsetting it at a previous, above a swing high, things like that. I don't really need to know the daily bias, because to me, when I looked at the daily bias, I said, okay, probably, yeah, we can go above this high, and then we could have looked for shorts, or maybe we could have also consolidated and kept going higher. I wasn't too sure what's going to happen for the day going forward, but I was sure what was happening at the moment, that I was looking for buys on a short-term premise. So we had, if we compare these lows on Nasdaq and S&P, again, this was literally just looking at the lows and comparing how price action behaves. We had this low here and this low here on Nasdaq. At the 9 AM, 9:05, this swing low never broke these, right? However, on on S&P, both of these lows were traded through at 9:05. So to me, this was important because I said, okay, we still have 10 AM news and market at 9:30 open, so we will most likely see another leg up above the swing high here, and hopefully above the swing high of the high of the previous day. That was my idea. So basically, I was buying the Judas swing until the market actually broke lower. With the 9:30 open, we saw a nice rally. So the first trade I took a loss on with this one. Where is the long position? So I was buying at this order block. I was thinking that, okay, since there's a difference on the lows, I saw that this order block will hold, and I had my 20-point stop. No, actually I bought a little bit, yeah, somewhere here on this up close candle. So my stop was literally just right at the low and 20 points. It actually slipped me, closed me at 21. And I was aiming for this high. So, you know, like my typical, usually like 2.3, 2.5 R trade, something like that. This was what I was looking for. And this was so I entered at 9:22 and immediately, well, I got taken out in like 4 or 5 minutes, right? So this was a loss, that's fine. However, still, I was looking at what price did here, how it barely broke below this low, and on S&P, it failed to break this low, right? So at that very moment, it felt like since S&P failed to break this low, so it's a stronger index, but you have to consider the bigger picture. Bigger picture was that S&P was still actually trading below this low here. So it already did this kind of damage here below these two lows. They took them out, while Nasdaq didn't. And you might ask, why these specific two lows? Well, to me, these lows are important. They stand out the most because, well, this low started an energetic run up, and with this candle, it took out this one high. Same with this low here. It started an energetic run up. You can see how candles just started going higher, took out eventually this high. So those are the things I'm looking for, okay? And the second entry was basically me seeing this price action difference, also a difference on the lows, but keeping in mind the bigger SMT at the time, that Nasdaq was actually stronger than S&P because S&P broke these lows. So I was buying the stronger index in hopes to see a more aggressive price action, right? And my entry was on this candle when it started tracing down. This was my entry somewhere here, and my stop also allowed myself also for a 20-point stop, which was kind of plenty, just in case. I entered 2 minutes before the 9:30 equities open. I allowed myself for an extra stop. I didn't want to place it here, that would be too tight, just in case, you know, the initial 9:30 volatility could spike a little lower. And as you can see, actually the 9:30 candle on S&P did spike below this low, but on Nasdaq it did not. Why again? Because in my understanding of price action, Nasdaq was still stronger on a bigger picture because it failed to break these lows. So it was stronger, so it did not have to spike below this low. And this was a quick 3R trade. I closed 61 points, I think. So again, my stop was 20 points, something to this effect, and I closed at 3R once price broke above this one high. So I didn't even wait until the previous day high was taken because I was already, you know, I was satisfied with the result. I got my loss back, and I got, on top of it, I got basically a 2R extra. So AM session ended up with 2R positive. So it was good. If I held, this would be a nice 4-something hour trade, but I didn't. That's usually how I trade. That's my style, anywhere between 2.5 R, but I was confident that this will take this high, so I waited for a 3R trade to also mitigate the loss. So hopefully this makes sense. So this is just, again, this was the idea behind the trades. Again, just strictly looking at price action, comparing the lows on the bigger scale, and understanding that we will most likely still break, price would want to reach for previous day's high before potentially going lower. And did I sell this short? No. This was a nice, actually S&P gave a nicer short, like inside the imbalance, and price came inside this down close candles. So this was a better short than Nasdaq, in my opinion. And you can see now it's dropping, kind of. So I just, I did not anticipate. So this is just again to show that, when I trade, I am very, very focused. I have all my notifications off of my phone. I'm strictly on the charts. I don't care about anyone else's bias, whatever someone has to say on social media. I don't care. I look at price action the way I see it, the way I understand it. Again, I've been trading now for a little bit over 5 years now. So, and like 2.5 with ICT. So I've developed my eye on certain things. They make sense to me. Might not make sense to you, especially if you're new, and that's fine. But the point is that I don't look at somebody else's analysis. Someone might say, okay, we're looking to go short in general, and they might be right, absolutely. But if I'm looking for a long, I might be right as well, because I'm looking for a long on the 1 minute chart just for a scalp, and someone is short in the high with the high time frame objective in mind. So this will only, this type of stuff, if you keep looking at what other people do, what other people opinion is on the market, this will only confuse you. That's why when I'm trading, I don't give a damn what other people think. I know what I'm looking for. I'm looking at price action the way it makes sense for me. And in this case, my initial trade was wrong. I saw the order block will hold. It did not. Then price action showed me extra confirmations, the ones I just talked about. I entered again, and this was a good trade. So that makes sense to me. And this is how I trade. I could have shorted this. I think maybe S&P, again, I like this trade better, but I wasn't looking at the time because I already, I compensated for my loss and ended in 2-hour profit. So it was good. I might come back in the PM session. Anyway, this was... hopefully this makes sense to you. Let me know what you think. If you think these breakdowns are helpful. And again, don't get discouraged if you don't really understand everything. With time and experience, you should be able to see more of the things that I'm talking about. And I think the biggest takeaway is from this video is that you should, even on the 1 minute time frame, you should always still keep in mind the bigger picture. Like you saw this small SMTs here, right, with Nasdaq not breaking this low. So if in that moment feel like, okay, if Nasdaq is not breaking this low, so S&P is not breaking this low, so it's a stronger index. But if you look overall just a little bit to the left, right, it took much longer. Right, it's all about time and price. It took much longer to develop this discrepancy on the lows. So to me, this is more significant. Again, I always say in the videos that I look at how long it takes for a certain liquidity pool to build up, right? So the longer it takes, the stronger it is as a draw on liquidity, and the same goes for SMT. SMT between several hours on the lows is more important than a tiny SMT across like half an hour, not even. And again, the bias was that I was looking for another run up, basically a Judas swing at the 930 open before potential run down. Okay, so hopefully this makes sense. Let me know in the comments what do you think. And until I talk to you next time, take care.